everyone and welcome to Moneycurious. So today's video is going to be about what's the maximum amount of tax-free income per annum that you can earn in the UK. You may have noticed that this channel is very UK specific, and that's actually the reason I wanted to start this channel. When you look on YouTube, you can find a lot of money and investment videos, but they're often not from people that are based in the UK. It's often the US actually, and I just found myself that I was interested in information that's UK specific. Obviously a lot of these videos can apply to other countries as well, but things like your personal allowance, such as we're going to discuss in this video, is specific to the UK. So if you're a UK viewer, you'll find this very useful, hopefully. So the first type of income that we're going to talk about here is your tax-free personal allowance. Now this is the amount of money that you can earn before you are taxed on your income. So when you go into a job and you get given a salary, say you earn 30,000 per annum, you can earn 12,500, and by the way, this figure is relevant for the tax year 2020 to 2021. It may go up, it may go down next year. So it's worth having a look at this if you're trying to calculate whether you've been taxed correctly or not. So anyway, for this year, your tax-free personal allowance is 12,500, which means this is the amount of income that you won't have to pay any tax on. So after that point, you will. So basically, what you're looking at doing is, say you earn 30,000 per annum, you take away from that the 12,500 and you will be taxed on the remainder. So the amount of tax that you'll be taxed on the remainder above and beyond that 12,500 is based on what tax bracket you end up in. So as we've mentioned, say you're quite a low earner and you earn under the 12,500, then you'll pay no tax on anything you earn in that year. If you're a basic rate taxpayer and you earn somewhere between even £1 over that personal allowance all the way up to £50,000, you'll be taxed at 20%. And by the way, just to point out here, if you earn £30,000 a year, you won't be taxed 20% on that whole £30,000 that you earn. You will be taxed on any money you earn above the 12,500 threshold. That's how it works. So secondly, you have a personal savings allowance, and this means the amount of interest that you can earn from your bank accounts every year and not be taxed on. Now, for a lot of you, you may have not ever earned up to £1,000 of interest from your bank accounts because, I mean, the rates now are awful during this pandemic, but even in the good years, you could only earn about 3% of interest on your bank accounts, and it's usually restricted based on how much you have in it. So they might say you can earn 3% on up to £5,000. So obviously that's not going to be £1,000 worth of interest. For example, if you have quite a bit of money in savings and you have several different bank accounts, you might be able to maximise the different interest rates on different bank accounts, and you can earn up to £1,000 and not get any tax on that. Now again, your personal savings allowance is related to what kind of taxpayer you are, what income tax band you are in. So if you're a basic rate taxpayer, then your personal saving allowance is £1,000. But if you do slip into that higher rate taxpayer band, then you can only earn up to £500 per annum without getting taxed on it. So everything above and beyond that £500 in interest, you will be taxed on it. And for additional rate taxpayers, you don't have any personal savings allowance at all, which is, I suppose, fair enough, arguably, because additional rate taxpayers have a taxable income of over £150,000. The next one is your dividend allowance. So your dividend allowance per annum is £2,000. So if you own shares in a company and these are outside of an ISA, so we're not talking about an ISA situation here, but if you own shares in a company, so that might be that you own a business and you have shares in that company, or it could be that you have a portfolio where you invest in different stocks and shares or ETFs or whatever, and you get dividend payments from those stocks and shares. You can earn up to £2,000 outside of an ISA before you have to pay tax on those dividends. Obviously, if you've got all of your income within an ISA and the current limit for an ISA is £20,000, any dividends you earn on that you will not get taxed on as well. So this is just an aside from that. So say you've got £20,000 to put away in an ISA, that's fantastic, but you might also have more money that you want to invest in the stock market. This is just to show you that you can earn up to £2,000 in dividends on top of your ISA. The next one is your property allowance. So the first £1,000 of your income from property rental is tax-free. Now, I did find something that kind of contradicts this actually, that there's a scheme called Rent-a-Room scheme, and it says that tax exemption is automatic if you earn less than £7,500 in the year. So the next one is your property allowance, and if you own a property and you decide to rent that out, then you can earn up to £1,000 of income before you're asked to pay tax on the money that you get from your rental income on that property. Now, I did find something that actually contradicts this a bit, and it's called the Rent-a-Room scheme. So in the UK, we've got this scheme, and this means that tax exemption is automatic if you earn less than £7,500 from rental income on that property, and it actually says on the government website that you don't need to do anything until you earn more than that in a given year. So this is a little bit contradictory, and maybe something, if you are a property owner and you're looking to rent that property out, something to look into a bit deeper, because on the one hand it's saying your property allowance is £1,000, on the other hand it's saying that if you're part of this scheme, then you've got a much larger allowance. And lastly, capital gains exemption. So this is quite a bit of money here. So you've got up to £12,300 that you can earn in capital gains and not get taxed on. And what capital gains is, it relates to anything, any asset that you basically acquire. So this could be gifts from someone other than your spouse. So if your auntie gave you £20,000 for your birthday, lucky you, but unfortunately you have to pay tax on anything that's over that £12,300 capital gains tax exemption. The same goes with inheritance. Inheritance is Inheritance is part of capital gains. So if you inherit a property or inherit some money after someone dies, then anything above that £12,300 you will get taxed on. And this also accounts for shares that are outside of an ISA. So if you're really well off and you max out your £20,000 ISA, and you've also got a load of money to put in the stock market as well, you can have £12,300 of gains, which could be just a stock growth plus your dividends, before you get taxed on any of it. Another capital gain example is the sale of a business. So it's basically any asset where you sell something and you get profit from it, and then you have to get taxed on that profit if it's over this limit. Capital gains tax comes into play when you make a profit from selling something you own. The important point to remember is that tax is calculated on the profit you make, not the amount you sold it for, as the name suggests. So there you have it. These are all the ways you can earn tax-free in the UK. I hope you found this video useful. Please subscribe, like and comment, and I'll catch you next time.